The S&P 500 hit fresh all-time highs at 66, 64, 36, up 0.49% during Friday's trading session. Friday was a huge OPEX day, and now we are starting the next OPEX cycle. The big question I have is, will we continue this uptrend that started back on the first trading day of September, taking us from 63.50 all the way up to 66.50? So 300 points basically in the last 3 weeks. And when I look at the gamma exposure data, we see several things that are very interesting on the chart. One is we're continuing to see pretty large gamma exposure at the 6,500 and the 6,600 strikes. So that in my mind tells me, especially as we start a new OPEX cycle, that there could be some sort of pullback, possibly in the 2 to 3% range. However, just taking a step back and looking bigger picture up the gamma exposure data, we continue to see large gamma exposure growing at these higher strikes. The next obvious target is 6,700 and potentially 7,000 by year end. So there are a growing number of bulls, and this is evidenced by the participation in the options market at higher and higher strikes. So later in the video, we're going to be talking about a number of big trades, both for next week and into year end, to basically take advantage of this potential move up to 7,000. But first, let's just zoom out and take a look at the daily candlestick chart before we do that. And I just want to show a couple of reasons why I think a slight pullback may be coming over the next couple of weeks as we enter into this next OPEX cycle. Basically, you can see as we zoom in here to the 50-day EMA, this is the red line on the chart. We are starting to really extend. You can see 50-day EMA is just above 6,400. And we're really starting to extend pretty far above that line, over 260 points above the 50-day EMA. And multiple times when this has happened before, you can see an immediate pullback. And so we've seen that over the last 3 trading sessions, this extension. And so I think there's a rising probability that we could see a pullback here in the next week or two. Another very important chart that we've been discussing both here in our YouTube channel as well with our members in our daily live stream is the volatility index. You know, we've been hanging below 20 on the VIX for the last several months, and this volatility compression ever since this big spike up here back in April has really been fast and furious, and we've basically just been consolidating down towards this 15 level. You can see gamma exposure is all concentrated between 15 and 17, and while we do have volume spikes like on Friday, for example, we had over 30,000 contracts traded at the 25 strike. So there are some participants taking advantage of this low volatility regime in order to hedge their portfolios and buying some outside volatility protection. But just in general, every single spike up that we've seen above the 50-day EMA on the VIX has resulted in vol sellers pouncing immediately over the last several months. And that's what's really been behind a lot of this compression that we've seen all the way down to the 15 level. So we're still in the 15s on the VIX. We continue to see volatility compression. One of the things that I'm looking for this week is to see if we get a little bit of a move higher than this most recent high that we've seen here on the VIX, which is just below the 17 level. So if we get a little bit of a spike above 17 on the VIX, we could see some sustained volatility potentially up to this 20 level. But as long as vol sellers jump back in and pressure the VIX lower, I think we'll remain in the buy the dip environment overall for the S&P and the broader markets. So next, let's take a look at a few names that we are actively trading. I want to start off with SoFi. Back on September 16th, we entered a position on SoFi. This is actually in our weekly setup, so this is a very short-term type of play, anywhere from 1 to 5 days. And we entered the September 19th 28.30 call debit spreads at 37 cents. And you can see the setup at the time. SoFi was trading just above the 27 strike, and we posted at the time that this resistance looked like it was getting ready to break out, actually trading above 27, and resistance was just below 27, and we were seeing gamma exposure at higher strikes grow, specifically in contracts that were expiring that coming Friday. So this was just a short, like 3-day type of trade to take advantage of a quick move up towards that 30 strike by September 19th. And so if we just fast forward, we actually were able to lock in $730 profit on those September 19th 28.30 call debit spreads. So heading back here to our gamma exposure chart, we actually have our time machine feature pulled up, and you can see I've got it on September 16th at 10 a.m. So just before we entered the position, you can see we were pulling right back into this moving average on our chart with the big gamma exposure at the 30 strike and just look at how things played out. We did get a tick lower over the course of the next trading session, but gamma exposure was still very strong all the way up here at this 30 strike. And so as the trading sessions went on all the way into the September 19th expiration, you can see how everything just basically moved up towards that 30 strike. We actually didn't quite hit it. We got pretty close, but knowing that advance notice that market participants were piling in to that 30 strike on top of the short-term breakout that we saw above 27 gave us a really nice indication for a short-term trade. Now I bring up this SoFi trade because I think these type of trades are going to become more and more prevalent as the market continues to head into year end, especially with the FOMC showing some dovishness this past week. And we see, of course, the 30 strike is the largest gamma exposure on SoFi, but look at this, 32 and 35 is now starting to grow. We're looking for a pullback maybe to 28 or 27 for another re-entry point. Keeping an eye on these gamma exposure strikes above 30 because I think the potential to really run here into year end. And so SoFi is one of those names that's going to stay at the top of our list. Next, let's take a look at Tesla. Tesla's made a huge move over the last week to week and a half, finally breaking out above the 350 level, now trading at 426.07, up 2.21% during Friday's trading session. We can see the big gamma exposure at the 400 strike has already been hit and blown through. And if we scroll higher up the options chain, we can see gamma exposure continues to grow at higher strikes. And so we see the 450 strike as the next obvious target, followed by the 500 strike. And we're even starting to see gamma exposure growing at the 600 strike. So Tesla has the potential to be a big mover into year end. This is another one of those names that is high up on our watch list. And we're seeing consolidation over the last week to week and a half above 400. And I think that's key because once that consolidation breaks out, 450 could be next, and we could potentially see 500 not long after that. By the way, if you want to see all the moves we're making and track our trades in real time, you can become a member at geeksoffinance.com, and you can also join our community Discord absolutely free. I'll put links in the description below to both of those so you guys can check it out. Next, let's take a look at small caps by reviewing IWM. IWM is actually down on Friday, 0.76%, closing just below 243. IWM is at a very interesting point. We can see we were at this level back in the end of 2024, around the November to December timeframe, and ultimately rejected from there, and we're coming right back up to that level. We can see gamma exposure has been growing at the 240 strike as well as the 250 strike, as you can see on our chart. We still have some negative gamma exposure at the 220 to 230 strikes as well. So this does suggest to us the probability of a pullback into this 50-day EMA as well as our lower dealer cluster zone. You know, this zone makes sense for a pullback, but we would still be in the overall uptrend if that were to take place. So if we did get that kind of pullback, that'd be a fantastic opportunity to load up more. We actually currently have a position in IWM targeting a move into year end. We've got the 250 275 call debit spreads. So we're getting near the lower end of our call debit spread. That's been working out really nicely for us. But of course, we are holding out for a larger breakout. And so this is a bet that basically we're going to break above these major levels here into year end, somewhere into the 260 to 270 range to make a really nice profit. But again, this is a longer term hold for us, holding into the December expiration. Basically, it's a bet that this overall uptrend will continue into year end. And so even if we did see a pullback to the lower end of that channel, that would just be an opportunity for us to load up a little bit more on the position. And we do have a limited time promotion. You can get $300 off our yearly portfolio manager tier subscription. Use code September 2025 at checkout. This promotion is ending soon. We do have a few spots remaining though, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And as I mentioned earlier, you will also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and ideas. And you can also track our trades in real time as we manage our options portfolio. It's a great resource. Definitely check it out when you get a second. I'll put links in the description below to both of those so you guys can take a look. Thanks so much everybody for watching, and we'll see you guys in the next video.